Good morning, everyone. Paul here with GammaEdge. Today is Thursday, the 15th of June. Let's get started. Pause your players here. I want you to read to the bottom. For those of you who are looking at this in the Discord, I know you're familiar with this, but this is important to you. This is important to us. And so if you agree, hit that play button, and I'll hit it for you since we're recording this live. So the summary for today, as we talked about last night on the open mic, the short-term market model is bearish. We had a decrease in the cumulative tick on the shortest time frames, so the instantaneous or bold white line, you'll see that on the next slide, did close below the previous day's close, and that means it's a trigger down. We also had a railroad track pattern down, and what that means is that although it didn't fully invert, it's turned off and we're waiting. So we're eating the popcorn right now and just waiting to see what Mr. Market does for us today. All of that said, longer term, the market model is bullish. This is not predictive, but it does indicate that we are in this positive upside momentum. And again, we'll talk a little bit about that on the CT on the next slide. The combo market model, we have calls as far as the eye can see above us, so those are out of the money dominance, and we have calls as far as we can see below us, and this is in the money call dominance. So puts are not visible, they're not coming through. That's important. It doesn't mean that they're not there, it just means that they are not dominant on either side of these things. I will note that there was slight weakening yesterday with Wednesday's action, but we are still very bullish on this. Transitions, we think it's important for everyone to know where you are in respect to transition. So we closed at 43.72, only up 3 points from the previous day. The PM settled complex transition moved up 9 strikes yesterday. So what that typically means is that you've got puts that have come in below us and kind of pushed where that boundary is up. And we've had some calls come out of the complex. So we're now sitting right at the top of transition, which is a safe place to be. There's no other way to describe it. Minus trans has moved up. It was at 42.45 and is now 42.65. So we're not stretched and we can move in either direction. This becomes a launching pad. You know, our bet here is that we're going to go see some volatility and with some potential downside, but the market is also suggesting that we could certainly move up. I'll note again that the combo complex, the P-trans level, which is that level at which it and all the strikes above it are in a positive gamma environment, it's complicated by this JPM end of month June 43.20 strike. There's 39,700 short calls sitting there, and so that throws a little wrinkle into how the algo would calculate where P-trans is and where the eye would see it. It's not a liquid strike, but it will become more and more relevant as we go forward. If we do ignore that 43.20 strike, the plus level or plus trans level shifts down to 42.50, which is a considerable amount below us. And you'll see on the next to last slide, the SPX complex is in unprecedented, uncharted waters here, and I think this is very, very important for us. We can't advise on some of this because we've never seen this structure before, and we have no idea what the behavior is going to be when we get this side or this lopsided. Combo structure overall, minus GEX, that's left goalpost 3,900. It has dropped in its GEX exposure, even with a relatively unchanged level. We're seeing a drop in the overall GEX level that is not does not bode well for the short-term put buyers right now. Plus GEX remains up at 4,400, and it was up around 70,000, 72,000 GEX exposure yesterday, net GEX. It's now dropped to 50. This shows that calls have gone in and puts, or calls have come out, excuse me, and puts have gone in. The JPM strikes have emerged. We thought they would hold off until after tomorrow's expiry, until we remove some of the AMs and the PMs, but no, they, with yesterday's action with the FOMC and the closing of a lot of calls and introduction of some puts, especially below us now, they've reemerged and they are on the PM structure. For the 0DT folks who are in the Discord, today is the last trading day for the June SPX AM settle complex. So tomorrow morning at the open, that price that it prints at the open, the 9:30 Eastern open, will be the settlement number. Today's the last day for anyone who's holding the AM settle. These are typically the larger institutions. They've got to make a decision today, and we think that's important. There's over 1 billion in call-dominated gamma set to expire at the open tomorrow, and again, today's the last trading day for that. So we could see a melt up today towards that 4,400 and possibly a 1 DTE target of 44.25. So be aware of that. You'll see that here on the next slides. And we could see one of the if-thens is a possible implosion as those deltas wreak havoc both on Friday as well as next Monday. 4,400 clearly indicated, very much well within striking range. 43.72 right here is where we closed yesterday. 4,400 is not far above, so we could certainly move up there. To the downside, 43.30 remains the 0DT minus GEX, same as yesterday. Could be a drunken sailor walk to get there, and I'll explain that when we get to the 0DTE chart. Upper charm strike, 4,400. As I put in the PBI notes this morning, there's a very notable coincidence between the SPX PM complex and the AM complex in context of delta strikes, charm strikes, gamma strikes, and Vanna strikes. They are all aligning on the 4,400 and the 43.50s. I would urge everyone to go down and take a look at it, or run the charts in the Discord, and you'll see what I'm talking about. When you get a stacked coincidence like this, it's impressive, and it could be constructive or destructive depending on where we are. As always, watch the value command for targeting above and below. If we see a lot of action above 4,400, that could be enough to pull us up over 4,400, and then I think it would be off to the races to 44.25, and possibly even higher depending on where they target. The 43.50, if we see targeting there and below, that could actually pull us down, and it becomes a slippery slope once we go down from there. Market model, pretty much what you would expect here. The short-term cumulative tick, which is the bolded white line, closed slightly down. It's kind of horizontal. This is the ARCX model. And what this is basically telling us is that after the FOMC linear down move here, and then kind of digesting and just stabilizing overall in the overall market. So not a huge sell-off into the close. In fact, we had a rebound in the last 10 minutes, which is not indicated here, but it was certainly indicated for a few of the indexes. The railroad track pattern, you can see, started to turn off here. It is not all the way off. It could resume, much like what you see here, which happened last Tuesday, and then we could continue up. We'll just have to wait and see what happens there. But longer term, you can see that we are still in this expansive lower left, upper right pattern, and this is long-term bullish. So short-term pullback, which would be healthy. As long as we remain above the CT, we would be looking, as soon as we got an indication of some positive resumption of buying, we would be looking to get back into the market on the long side. Taking a look at the PM complex. In terms of gamma, I think it's important to understand. So first of all, still very, very call dominated. You can see that above the structure here. Here are the JPM strikes. So 43.65 is the end of July. Here's the 43.20, that's the end of June. You can see they have now come back, both in the gamma levels as well as the delta levels. The importance here is now these are in the money, and these are short calls that are in the money. They're going to be problematic in that they're not liquid. They're not going away. So the only way to neutralize these things is to put long calls on top of them. And typically, as price goes up, we don't buy long calls that are below us, that are in the money. They're too expensive. They don't have the gamma convexity. There's just no reason to do it. So these things are going to be material. I was hopeful, and we did see earlier in the week that we were pounding these things flat. They were flat. We had deltas knocked out of the way, and the gammas were out of the way. But now they've reemerged, especially with the FOMC news yesterday. People closed long calls, and they also put in additional puts, and that has caused these things to reemerge. Note the 4,400 And note the 43.20. If you ignore the 43.20 JPM strike here, you can see all the way on down the page. It's 42.65 is where the negative trend is, and that's a very wide range. And as the range gets broader and broader and broader, we typically see volatility creep back in. Probably more important to the folks watching, zero DTE is pretty important. So first of all, just your eye immediately goes to the 44.50. That's where the cliff stops. So any contributions today, absent value targeting, we're not going to really, if we do push aggressively north, we're not going to go any higher than 44.50, most likely. Probably stall right in that area if we push up into that, and if there's a lot of value. There's a lot of ifs here, if, right? COI for the zero DT is indicated up here at 44.50 also. This is the dominant call strike that's coming off. Remember, these are all out of the money, and they have a negative charm. And so that's important depending on where we are throughout the day. Now, let's talk a little bit about this because this is important. If this 4,400 strike, which is the dominant strike for today, as we move the yellow line up, as spot price starts approaching this 4,400 from below, the deltas at the 4,400 strike, due to gamma, due to that convexity, are going to accelerate upward, right? And this is going to make our book longer, faster, and it's going to make the dealer book shorter, faster. So as a result, the dealer is going to be buying to hedge flat, and that's going to push this line up. As we start pushing this line up, basically we're going to capture more calls, and those calls will be in the money, and they will have a positive charm. So depending on targeting that we see above us, and depending on if we make progress towards this 4,400 magnet, whatever you want to call it, I don't care what we call it, it's going to force us to now have more positive charm in the system, and depending on where we are in the day, especially in the afternoon session, that could actually propel us upwards. So we're looking at this 44.15 as kind of that first resting spot. Depends on when we get there and if we get there. I have no idea if we're going to do that, but I would be looking for a pause right around this 44.15 as a first holding spot. If we get targeting above that, we could easily pull up into this area, and more and more and more of the in the money, or more of the calls go in the money, and that will continue to force us up. And then all of these puts are obviously collapsing, and they will, the in the money calls combined with the out of the money puts will have a major charm push on deltas, making our books longer, the dealer's books shorter, and that could, really, it could become a runaway type of scenario. We don't see any contribution above the 44.50, and certainly if we see a lot of puts being opened down here, that would pull us downward. So let's talk about that. So first transition, your eye would probably pick this, but then we've got this dual node structure here. So actually transition is sitting down here at 43.45. So that really becomes today a line in the sand, and puts us down and keeps our eye on the 43.30 minus GEX level. So we're mindful of where we are. This is no surprise that we probably parked in this area for a reason. This is a gamma zero right in this zone. It makes perfect sense why we would park in this, and we also have a low delta exposure right in this area. So all the pieces kind of fit into place, and pretty much makes sense for this going forward picture. We could park in this area, right? The 43.45, 43.50, 43.55. That is a pretty strong area, and you can see just below it the delta levels are very small. You can also see delta levels, up and down are fairly small. And you can run these charts in the, not the PBI charts, but you can run the gamma charts in the Discord and see where we are throughout the day. So to the downside, loss of 43.30 will probably just be a meltdown to that 4,300 and then point south. So just be aware of that. We're not anticipating going below the 43.30. The charm strikes for today are very dominant at this 43.50 as well as the 4,400. And as I said earlier, when you run the SPX and the SPXP and you look at gamma, you look at delta, you look at charm, and you look at Vanna, you'll see that they're all coincident on this 4,400 and 43.50 zone. And so we think that's going to be the play box, or the sandbox for playing around today, but we'll see how things materialize. This is tomorrow, and this is the SPX PM settled complex. So this removes the effect of the AM. So this is literally what happens after the open tomorrow. And a couple things are apparent to me. So first of all, we've got this new node that has appeared up here, this 4430, wasn't here yesterday. It's not necessarily important because this is just a single DTE, but it does show that there aren't as many calls there as we have been expecting that are coming off. But across the board, extremely large amount of calls up and down are coming off tomorrow. So remember, we've got the SPX, which is the AM settled component. It's got a huge amount of gamma coming off tomorrow. The number of contracts is very, very large. It's all call dominated. And then in the afternoon, we have a large amount of call dominance coming off also. So when you have call deltas coming off the table, that basically is making our book shorter, makes the dealer's book longer, and the dealer has to hedge by selling, and that is going to put downward pressure. And as I said before we started here today, we're struggling to figure out what's a compensating mechanism that would invalidate this thesis, and we don't see one right now. Doesn't mean it can't happen, it just means we can't envision a scenario where you're offsetting the amount of gamma and delta that is coming off the complex today and tomorrow. Taking a look at the balance of the week, so this is everything. So this, the SPX here is the AM and the PMs, and so we're including both days. 1.2 billion coming off today and tomorrow, right? So this is a extremely large amount that's coming off. Mostly call dominated, as you can look up and down the strike chain here for deltas. And if you look up and down, we've got a lot of positive gamma coming off today and tomorrow. We don't normally see positive gamma to this magnitude below us. In fact, for those of you who have watched this for some time, we rarely see this type of behavior. When we get very stretched over where it starts transitioning to negative gamma, we tend to mean revert, but you can see right now there is no negative gamma with the exception of this little pocket that exists down here at 4330 and 4335. So if we continue down the page, it's still positive gamma. That is concerning. That's something we have never seen in over 2 years of doing this. That's a lot of data points, and we've never seen this structure. Taking a look into next week, we return more to quote unquote normal. You can see the negative gamma starting to peek through. That's more expected. You can see the put gamma really in overall magnitude, so you don't have to read the numbers, and you can see what the relative visual is on that. And here we are again next week with 4400 being dominant, and you can see the call open interest expiry for next week is also 4400. Right now out of the money, right now resistive, because the charm flows on this are negative. So into next week, depending on where we are in spot price, is going to have a real big impact on what the overall outcome is. And then taking a look at to the end of the month, remember we have the JPM roll at the end of the month, and still a lot of calls coming off the table, 1.5 billion between now and the end of the month. This does include what's coming off tomorrow, today and tomorrow. And so what's important here is that we're still very, very much abnormal through the end of the month. Now a lot of this is today and tomorrow, as we just discussed. But just be aware, a lot of calls and call delta coming off, and taking with it, of course, all of that gamma convexity, and that's gonna have an impact here. And then finally, taking a look at the combo complex, a couple things I circled here for you. First of all, almost 21 million contracts of the SPX. This is remarkable. We have never seen these magnitude of numbers, certainly top 1 or 2 of all time. There is a lot of speculation going on. A lot of people are playing with the SPX. 2.2 billion in net notional gamma exposure. That's huge. That is a huge amount that is set to come off. And this is what I was talking about earlier. You can see that we are completely out of the money, call dominated above us in delta, and you can see the gammas are very, very large all the way on up the chain. And then down below us in the money, calls dominate as far as the eye can see in terms of delta, but take a look over here in the gamma column. So 4320 is that JPM strike for the end of June. The first crack in the ice, 4245, right? And this actually, I didn't even put it on here because it's noise. We don't actually start seeing negative trends until down at 3850. So just be aware. Now that just is so bizarre from where we are right now. It just shows what the magnitude of tomorrow is really, today and tomorrow is really bringing to the table. So final slide here. First of all, right goalpost 4,400, left goalpost 3,900. The magnitude is less than it was yesterday, but price is relatively unchanged. We were at 30 or 43.69 yesterday. We're at 43.72 today. So you can't explain the reduction here as pure spot change. It is actually, when you go and look, they have closed some of their puts there, and it's just amazing. It's trying to think of why people would do something like that. There's just no fear, and we are clearly on one side of the boat. The other thing that I want to draw your eye to is that transition is broadening out, and when transition broadens out instead of becoming well defined, we have an uncertain market. And an uncertain market, that typically means more volatility both up and down. Volatility isn't necessarily a negative thing. So just be aware, we've got a real battle, we've got a market in play. 4,300 is really, you can see a dominant line here. If we lose 4,300, we think sentiment really starts to change, but we're still in a what we would call net
order
call-dominated environment down to 4,250. Once we get down to 4,250, you can see it gets real weak, where it's being offset by the puts, and then certainly below 4,100, it's lights out for the bears or for the bulls. Below 4,100, I think by the time we get there, we're going to see an explosion in puts down here as price comes down and as
order
people start
filled
buying puts in a panic, whatever they're doing there. So that's it. For those of you who are watching live in the Discord, thank you. Really appreciate it. For those of you who are watching this on YouTube, just come on into GammaEdge.us, upper right-hand corner,
order
pricing
filled
tab, fill out the blanks, come on in, 14-day free trial. Great group of traders watching this right now, since we are recording it live, able to answer your questions, and just a great community. Follow us on Twitter at GammaEdges with an S if you haven't done so, and then of course subscribe here on YouTube if you're watching it there, simply just so you can get notified next time we post something. So with that, I know we went over about 22 minutes, but I would, I want to thank everyone for your participation, and hope to see you in the Discord. Thanks, everyone.